Hello, I'm Kate Stichina on InstaForex TV with the fresh Forex news. For the Swiss National Bank, it is harder now to restrain the Swiss franc from the too strong growth against the euro, which is the currency of the major Swiss trading partner. The data released on Tuesday showed that economic activity in Switzerland advanced more at the end of 2009 than it was expected. This increased the probability that the Central Bank of Switzerland can start the tightening of the monetary policy earlier than the European Central Bank. In this case, the stiffening of the policy will entail the further strengthening of the franc. The GDP of Switzerland in the fourth quarter of 2009 upturned by 0.7% after the growth by 0.5% in the third quarter. This was caused by the raising of the consumer spending, the governmental support measures, and the world demand for the Swiss commodities. In comparison with the same period of the previous year, the GDP grew by 0.6%, whereas it was expected the reduction by 0.3%. This acceleration hardly will be the single event, despite the warnings of the major economist of the Swiss government, Immo Brunetti, about the fact that the recovery of the economy will be moderate amid the gradual disappearing of the influence from the world economic stimulus. Brunetti has also noted that the strength of the franc still poses a risk for the economic revival. Besides, Switzerland, along with the Nordic countries, especially with Sweden, compounds a good periphery for the Eurozone. According to his words, these countries have a favorable dynamics of growth, less fiscal problems and stable A ratings. This contrasts with the situation in the weak countries of the Eurozone, such as Greece, Portugal and even Spain, which still has a 3.8 rating. The fears concerning the fiscal problems of these countries provoked the purchase of the asylum currencies and pushed upwards the Swiss currency against the euro. Taking into account that the Eurozone is still the largest trading partner of Switzerland, even in spite of its export increase to growing countries with the emerging market, the strong franc may wreck the recovery of the Swiss economy and negatively influence its competitive ability. If the economic growth in the Eurozone stops in the situation when the governments with debt loads reduce spending and increase taxes, it can damage the demand of the Swiss export. According to the current forecast of the Swiss government, the GDP of Switzerland will grow by 0.7% in 2010 and by 2% in 2011. However, the government plans to revise these forecasts at the 60th of March. The economists of the private sector predict that the advance of the economic activity in the country may achieve 2% this year. We'll be back tomorrow at the next release. Goodbye.